Good morning, traders. Welcome to the new week. I wish you all have a spiffing, pleasant week ahead. Lots of pips to be made. I hope you get a lot of them. Morning, Kay.
Good morning, Ryan. Good morning, everybody.
Have a good weekend, mate.
Yeah, I had some folks over Friday on Saturday, so I'd say I'm still recovering.
Yeah. I wish Monday's always a bad day for me. I hate Mondays. I think the week should start on a Tuesday, but then probably the long weekend, I'd want the week to then start on a Wednesday. So keep going. You want the week to last 2 days and the weekends to last 5.
Yeah, sometimes it's like that, And when I was younger, I could party for 2 or 3 days in a row and then feel pretty okay the next. Now, 2 days in a row, and I'm gonna need probably 2 full days to recover.
Yeah, that's old age for you, mate. Old age for you. Well, anyway, we've got, hopefully we have a bit of a party this week as far as trading goes. It's not too busy a week on the data front. Just have a quick look at that. Not a lot out at all this week, as is often the case right after the NFP week. Obviously, we had a busy week of data, central banks the last couple of weeks. So a bit quiet this week. Eurozone retail sales tomorrow. Got some Chinese data coming up on Wednesday, CPI and PPI numbers there. I'll speak a little bit on that in some of the headlines in a moment. Wholesale inventory is something just to keep an eye on there for the retail market as well, or retail data, retail sales, just to see if inventories are affecting possible sales. If there's a slowdown in spending, you tend to see inventories dipping back. The big number really is going to be in the US on Thursday when we get the newest CPI report, given everything that we've had from the Fed last week, and particularly Powell and his little hawkish tilt in terms of rates going potentially higher than the market's been expecting. That's going to need to be backed up in this data. As you may recall, we've had 3 reports now of lower inflation numbers, headline inflation on the trot, although we have seen the core numbers up twice on the trot. Usually the core tends to lag, so if we get another negative headline CPI number, we should be potentially looking for the core to turn around as well. But that's going to be big data on Thursday. We seem to be now jumping around from central banks to what the data is going to be doing. Can the Fed get as high as they want to go? Is Powell's new hawkishness justified? This is the data that will tell us that. On Friday, get a bit of CPI data, monthly GDP numbers from the UK industrial production, and then the first Michigan consumer sentiment, the flash number for the new month on Friday as well. So not a whole lot of data, but enough to keep us busy. And of course, we're in midterms, the US midterms orbit. I don't really have a clue what's going on over there with that, or what the market impact's likely to be, save for the fact that the market doesn't like political uncertainty. So if there's a good showing from Biden's party, maintaining the status quo, that's likely to keep markets comforted. But if there's any upsets, then we could see some moves going on. But we'll be talking a lot about that, no doubt, this week. And I'm probably going to ask some advice of the guys when we get on the F.A.C.E show later, because I really don't know how it falls. You got any ideas of this midterm stuff, Kay?
Yeah, and I think starting Friday and this morning, we have seen a little bit what it may be to get a split government. And there's a possibility of a lame duck presidency, right? And that shouldn't be great for the dollar, as you say. Some uncertainty. Well, the uncertainty will lie in the fact that Biden's every proposal, if the Republicans get the House and the Senate, every proposal will be just shot down at the entrance door, and that's going to make things difficult to government, put packages in place, his famous packages that he was still trying to put in place, which partially got shut down by his own party. So it's going to be a difficult situation for him, and I've got the impression that that is what our early doors market was kind of trading this morning. The uncertainty going forward. I've read a couple of bank strategies on what may happen, and I'm glad to know that they are completely split as well. So basically, they don't have a clue either. The funny thing is that some say that if we get a gridlock, it should be really good for stocks. But then on the other hand, I'm not sure if investors really like a gridlocked government, especially not in the US. So there's a bit of both sides of the coin, a bit of wild guesses as what may happen to yields as well. I'd rather be in the camp of saying if you get a gridlock and if you get like less packages put in place, that's less money for the treasury to have to fund, and it would kind of weigh on yields, I'd say. It's also a bit counterproductive for getting the economy rocking and rolling, and I'd say by per correlation it should be negative dollars, and I reckon that's what we are seeing this morning. Dollar selling, despite the Chinese rejecting those reopening plans and maintaining their COVID zero. But we'll have a chat about that a little later, because there's a bit of stuff
Yeah,
going on
certainly,
there.
mate. Certainly.
There's really a bit of strange stuff going on there.
Yeah, it's a bit of a washing machine at the moment. In stuff, there's lots of things going on. We just come over the Fed hump, come through the NFP data, which we'll talk about. Got this China stuff still rolling on, stuff in the UK. It's just all the central banks we've just had a big round of. We're coming into year end. It could be just one of these funky moments in time we get in trading. But we'll start in China, and yeah, we've had all these on-off rumours. Again, we had another denial of all the stuff we got late last week, saying that the COVID policy is here to stay, officials saying it's here to stay. We've even had the Security Times saying that financial regulators should get involved in some of these rumours and should start punishing false reports, because they are market moving. That's of no doubt, but that's obviously state media rallying against the narrative of these COVID easing rumours. But the market is just not letting it go. This is a bit like the Fed pivoters. I'm calling them the COVID pivoters. They won't let it go. They see that they think that China is going to have to ease up at some point, and they're going to keep pushing this narrative. They're going to keep trying to trade it, and it's a similar theme. They try and trade it, it gets officially denied. Then something else pops up. They trade it, gets officially denied. You can see that in dollar yuan moves. We were all looking quite bearish on Friday, and bang, we gap up open over the weekend or early Sunday when we got those denials coming out over the weekend. So it can be tradable. Both myself and K-Man, we're happy to jump in and out if we catch a headline or something, depending on which way it goes. China aren't a country that's going to give up on their way that easily. If they do, then we'll know about it, and then they'll give us good indication on that. But for the moment, we're just going to carry on, playing between the goalposts and let the market do its pivot. Let the officials come out and deny it until that changes. Then that's potentially some trading opportunities for us. Looking at some of the data overnight, we had trade balance data. Where am I going here? So a bit down in activity overall. Trade balance dropping there to 85.15 billion. Missing by 10 billion. Was slightly up on last month though. But what's most interesting is exports went into the negative. They haven't been in negative since, I think, sometime in 2020. And the fact that both numbers are negative shows what's happening in China. An overall drop in activity, and obviously we're hearing at the moment there's more lockdowns coming in place, lockdowns being extended. Beijing also, potentially going towards lockdowns and restrictions there. So, there are still problems with COVID over there. I think it was the highest number of cases in 6 months or something that was reported over the weekend. But then you look at, what's happened on the other side. We're seeing stocks in China, stocks in Hong Kong, rallying quite significantly. And, this doesn't smell of an economy that's potentially going to be shut down again. Is this officials? We heard about officials propping up the stock market potentially into the party congress. Is this more smoothing being done by officials, or is this the market generally buying into China because it's got this bone about COVID easing? So there's a lot of stuff going on, and it can be hard to decipher. You throw this into the mix of everything we've been talking about: central banks, US data, everything else going on in the world. And when you get a moment when there's lots of influences, different global influences, it can be hard to get a handle on what's happening in markets. Look at this morning. I was sitting down. Cable was trading under 113. You go and make a cup of tea, and it's up above 114. Unbelievable, really, what's going on. But this is markets for you, and we just got to make the most of it. And if you're not sure what's happening in the middle, you stick to the edges. You look at the ranges. Are we breaking anywhere new, or are we just walking in old ground? And if we're walking old ground, then you rely on the ranges, and you only look to see if something's changed if those ranges start breaking. So taking the UK into consideration, it looks like the complete trust 180 is happening, from fiscal spending, increased borrowing, tax cuts. We've gone completely the other way, and now we're slowing spending and looking at tax rises to the tune of some 40 to 65 billion. This is austerity Mark II, apparently. And some in the market are liking this to the rally in the pound. I mean, I don't know. I've never known the pound to go up on taxes going up and a lack of spending or reduction in spending, especially when you're potentially heading into a recession. That is the time you want to see the opposite happening. And so from an investor standpoint, I can't see in any way why that sort of news is positive for the pound. But as we say, there's far more things to look at the moment. China headlines ruling the roost, all these rumors, because we see metals up, we're seeing oil up, we're seeing risk up generally. So it's a bit of a mess at the moment. But let's switch over to the Fed quickly, just to hear some of the members speaking after the FOMC. Fed's Evans said that it makes sense to shift to smaller hikes. Kashkari said that the jobs reports show more hikes are needed. Fed's Collins said that the Fed needs to focus or shift focus from the size of hikes to the ultimate destination for rates. That's an important point we've been making for a while now. Barkin said he's unsure of what move will happen in December, needs to watch more data. But he said it could be a potentially higher end point for rates, even if hikes are slower. So again, reinforcing that rates may need to be higher for longer, even if they're slower getting there. And the rates could end up above 5%, although it's not a base case. Looking back at the data on Friday, I'm not there. Where am I? Friday the 4th. Right, so we had two sets of jobs reports out. Start with the NFP. It was pretty strong. The number 261k, well above expectations. But we saw a bit of a rise in the unemployment rate, up 2 pips on last month. Some of that can be put down to the participation rate as well, making it doubly bad because the participation rate dropped, which normally can take the unemployment rate down. So this was a bit of a double whammy there. And I think the market jumped on that side of things in the jobs report, saying that, well, unemployment rate was up even with the participation rate coming down. Is that a signal that the jobs market is starting to turn? You wouldn't know it based on the headline NFP, but the dollar reacted, it bounced, and then it just completely reversed and went the other way. So very messy price action we saw there. Over in Canada, an absolutely bonza employment report, up 108k, with full-time employment up 119,000. Very surprising number there. Although the unemployment rate stayed level, again, that participation rate having a lot to do with that there as well, but a very strong number there. What did you make of the data, Kay?
Yeah, the thing is, so in the US report, the weakness, as you were saying, has been shown in the unemployment rate, and it seems like the number of unemployed is going up, despite we are seeing those NFP still going up. So there's all sorts of articles out saying that there's a gap in what's the non-farm payroll showing in the real employment in the economy. So I think that may have had to do with the employment rate then rising, and despite a higher NFP, and the market took that in its stride. And then also, I think technically it was a bit, the dollar was on levels that the market was looking at, and then again something that we've seen continuation of this morning, despite the Chinese comments, is that I think once that report was over, people started to hedge positions or adjust positions already into the midterms. And then the Canadian one, it seems the biggest part comes from the migrants part of it. So they have seen a lot of jobs created on that side, but it's a really good support, because you got unemployment rate sticky, participation rate going up, and then and a big change in full-time employment, which is normally an extremely good cocktail. And we saw, albeit being a yo-yo, we saw dollar Canada come down sharply. The one thing that I was a bit surprised about was the Euro Canada. Why this went down like 60-70 pips and then reversed for 200. And I'm a little bit perplexed about it, because I was short some Euro Canada, went well for a while, and then it completely turned around. Yeah, so that one is a bit of a question mark to me. But yeah, I guess it's more got to do again with the stuff that I'm regularly talking about, that the market seems to be trading the Americas block versus the rest of the world. And we are seeing as well the Euromex went up 1 or 1.5% from the lows, and Euro Canada did the similar thing. So the dollars and the American block currencies seems to be walking together, besides their own particularities in the middle. So dollar CAD lower, dollar MEX is still lower, but versus the rest of the world, they are not going up much. And
yeah, I guess maybe a week for watching the crosses more than the majors.
Yeah, it looks like it, right? Or don't look at the crosses and let those live their own lives. And back on what you were saying in regards to the sterling, I think it's got a lot to do with mechanics. And you're saying, like, I don't understand investors buying sterling when you're going to austerity in a high inflation or fragile economy. But I think it's just the opposite of what we've seen with trust. It's a question of confidence in the government's handling of a certain situation. And again, I'm not sure it's going to last, but I understand the mechanics of what happened in the sterling is that the fear of a blowing up market and Bank of England completely losing control of anything with Truss and her chancellor's package, and now it's been completely reversed. So the investor says, well, if you assume that the sterling is going to fall apart with what Truss and her buddy were doing, now we have to assume that they are going to control the government's finances, less borrowing, less risk of the market blowing up. And so we need to buy back sterling. And I think that's the mechanics of what we have seen today. Agree or disagree is another thing, right? I'm also quite reluctant to follow this move. The cable is a difficult one into the midterms, right? Because I'm a little afraid of what's going to happen to the dollar over the midterms. But as far as stuff like euro sterling is concerned, for instance, I'm trying to catch a knife right now, actually. Try to buy the low 87 and see what's going on, because as what I was saying as well in the chat rooms is that I understand the dollar moves into the midterms, but then why the euro sterling went 70 points lower or 80 points lower? There must be some sterling element in it, right? Not only the dollar going weaker for what the cable or the sterling as a currency is concerned. So, and that's the bit I think which has to do with the austerity. But as you say, in the current situation, austerity should not be the right thing to do for the street economy. So I reckon that we may see a bit of a reversal in the sterling through some instrument, and cable could be one, but I'm more looking at euro sterling right now.
Yeah, well, I think if the last particularly 5-6 years has shown us anything, it's that the usual things the rules of thumb that we all know about completely go out the window at some point anyway. So there are just times when you can do nothing but throw your hands up in the air and say, I have no idea what's going on. You all like to try and get into the nitty gritty, find out what's driving a particular price. Sometimes, even if you've been in markets as long as we have, you just don't have an idea. I think we're in one of those times now, don't you reckon, Kay?
Well, I know. I was even trying to, and I was searching. Did I miss something on the M&A side? Is there some cross-border M&A that somebody needs sterling to buy a company or so? But I haven't seen anything at all. So I put it down to the mechanics of what investors or money managers look at, because a lot of it now is model driven, right? And some of the models may have turned and say like, oh, right, this is less spending, less more money in the coffers compared to what Truss was trying to do. And so we have to reverse positions in the sterling. And I reckon that is what we are seeing now. Is it going to last? I'm a little in doubt, but let's see what happens, right? I mean, we can all be trying to find something and then be completely wrong, or the market taking it much further than we think, because they have to. But yeah, and I'm also in the camp of saying it might not last.
Yeah, exactly.
Because of the underlying situation right now.
Yeah. Right, I'm going to have a look at a couple of pairs, and then I shall let Kay loose on his charts. Dollar CAD was one I was trading on Friday without success, just playing off this 135 level, just trying some small longs into that, got stopped out on the other side. I refrained from going with a break short, so reversing the trade into a short, because it just didn't feel like the driver was. It didn't feel like it was going to blow through. That's been the case. We've got down to pretty much the low 70s before bouncing back above. So it's having one of these times where the market doesn't know what to do around here. We're moving below, we're holding below, getting back above, holding above. Now we're back below again, holding below, but really not cementing the move lower. you know, down to the mid 60s there, 34.60s. So it's not a decisive break, and I will.
We've lost you there, Ryan. We don't hear what you're saying. Ryan's microphone is gone. Ryan? Okay. Right. I'm going to take over here. I'm going to let me switch around a few. Whoops, let me just switch around a couple of screens here and I'll be with you guys until Ryan is back. So Ryan was on the dollar Canada. Let me just pull up that dollar Canada the way I was looking at it. Okay, so Ryan was telling about Canada after the report. We saw a pretty sharp drop on Friday, ramping through this. The way I'm looking at it is this and this, and there's another one here which is a head and shoulder that's been identified already a few times in our room as well, and we're back below the neckline here. So the 135 is going to be a pivot which we're turning around. And
hello, hello.
Yeah, we can hear you again, Ryan.
Oh yes, sorry about that. I don't know what happened. Yeah.
Should I continue?
Yeah, crack on, mate. Yeah, crack on.
Okay. All right. So this is the one. I think the 135 is a bit the pivot area where we're going to turn around here, as I was saying, the neckline. But then, barring this big spike here above, we seem to be back into a bit of a downward channel. Could still be a flag, but we've also seen that a bit of a longer term line is being tested now around 134.70, and that's another one. It could be just our confirmation, you know, 134.70. If it goes and it holds below, the confirmation that this bottom is now giving way, and we may be trading back to mid 133s. Keep an eye on that one. I just want to touch on what's happening in China, right? To me, at least technically, we're still firmly in an upward trend. We went to go and test it, tried to go a little bit below, but we couldn't break the prior low around 716.5, which is a nice point of measure, and we're back into this upward channel. And so what I also think is that we've been trying to figure out what's happening there, and people, it's all guesswork, right? What's happening in China, but there's no smoke without fire, still somewhere. But I think they may be just sending out messages, testing the waters, and by doing so, propping up their stock markets, getting pressure off the Chinese yuan, and then coming back with their official message in between brackets, and which is, oh no, we are not changing anything yet. But then who knows? By the end of the week, we might have another. If China weakens again, we might have another few comments to put the CNH a bit stronger again, to underpin their stock markets. So I think there's a bit of gaming going on there as well, because they know that if they just continue their money injections, their support for the economy, all the while keeping the zero COVID, the market is really going to test them and probably sell a lot of their assets. So I think there's a bit of gaming going on there as well. Just my personal opinion. Then moving on to what's happening in the yen. Dollar yen is trying. We could actually put a bit of a double line here, right here. double. It's trying to stay in the upward channel. It is succeeding for the moment, but at the same time, it's now trapped in inside a small triangle, and it's going to look a bit messy. But look at this on the 4-hour cloud. What's been happening of late is we test it, and we fail. And then we drop below, we retest it, and we fail. Then we go and test the high again, and we fail. And this morning we did exactly the same. We just tested the underside around 147.55, and we're failing again. So is it managed? I'm not sure. Okay, today the dollar really got a hammering. So it's logic that we are retesting the lows here. But so keep an eye on 145, 35, 40, 146, sorry, 35, 40, 146, 15, and this one, which has been tested a few times, but to me is going to be the real barometer to see if we, and that's now around 145.60, to see if we get a close below, there may be more issues in dollar yen. And I'm not excluding the midterms to give it a serious test again in the US. So that's a level that I'm going to watch together with the what I've been already saying, the 144.80. So this is a zone here where we should be really paying close attention to what's happening in the dollar yen. On other stuff, sterling. All right, we have a bit of a trend line here, which has been retested together with the 23.6 of the latest move, and that's all happening around 114.70. Tagged it this morning. We're still not far away. I'm going to keep an eye on what's happening for a starter around 114 the figure, and then lower 113s again around 113 and a quarter 2025 if we in case we get rejections around here. But I am really, we should allow for a move back into the 115s if the midterms are going to put further pressure on the dollar. The big one is still around here for me. Well, this trend line is now coming lower, but so 116.40, 116.70 is going to be an important level, and I'm still watching as well 117.60. So basically every like 100 or 115 points above, there should be some activity to monitor the sterling. As I was saying, I'm a little in doubt that we are going to see long-lasting moves on the sterling, but for the time being, we have to admit that sterling is the strongest of the currencies, and we've seen again into the top of the hour. We've seen again some sterling buying going on, and euro sterling is trading lower again. On the euro sterling, same thing here, bit of a trend line rejection up at 87, 85, 90. Then we have like the mid of the range, 87.40. It all gave way very easily this morning, and now we're already looking at the next one, which is at 87 the figure. As I said, I'm trying to catch, but I'm keeping it really small, and amounts and risk are really tight because I'm a bit unsure about what's going on here, but I am trying to catch a knife in front of this 87 the figure on the euro sterling. Other stuff, Aussie, that's not the Aussie, that's the dollar CAD I spoke about. It's the other one. Yeah, Aussie dollar. Bit of a resistance here, trend line resistance around 64.75. Tagged it this morning. I'm keeping an eye on that one. The bigger one, of course, being still 65.2030, 2025 on top if we're getting there. I wouldn't exclude if we get through this 64.75 again, perhaps this afternoon when New York walks in, that we see a test of this 65.20 again. But If it caps here, we could see a move back into the mid zone, which is going to take us around the low 64s again, from where we took off basically this morning. Kiwi still, you know, quite constructive, and we are nearly back to the Wednesday's spike high. We're trading above 59 again. Kiwi has been really constructive along this broken channel, and it's one that we really should pay attention to. It's now around 85.60, another fib around 85.70. So this 58.67 should really be supportive on the Kiwi dollar if ever we get a retest. For the start of the week, I think this is enough for me. What do you guys think about oil? Can COP27 affect the movement in the short term? Well, for the time being, there's a bit of gaming going on between what's happening between the OPEC community and the rest of the world. The rest of the world is trying to put pressure on the OPEC. I've even seen a German lawyer also trying to bring a case to justice in regards to OPEC because of cartel forming, and it would be a first in history. There's every chance that it doesn't make it to court, but it's a bit of a first. So COP27, I'm a bit unsure about what they can do about the oil price right here and now, because they are talking about stuff which should be happening in 2030 and beyond, right? I'm not sure if COP27 can have a direct impact on oil prices. But we were talking in the room about the WTI. There's a bit of resistance here, right? Between 93 and a half, and then I can see some more creeping in above 95 up to 96. But yeah, for the time being, it's big. OPEC is still keeping control of it, and I reckon the SPR, where the US was trying to buy oil below 80 towards 70, has put some speculators in the hot seat again, and taking it up here. For the time being, the winter is relatively mild, but yet we are seeing reserves needing to be replenished, and keeping this bit short term. Maybe a bit resistance again coming in here, as we can see. Been a bit of this upward channel, and that resistance comes in again around 93 and a half. Keep an eye on that level, I would say. Ryan, are you there?
Yeah, I'm here, mate. Can you hear me all right?
Yeah, I can hear you. I'm just going to have a last look at the metals. Oil back, gold, sorry, back into this 77.89 zone, but it's broken a bit of a trend line. We could argue it's banging its head against another one, which is shorter term, this one. And that again is around 1680. It's all going to happen in the 1680, 1690 zone if it has to go. Same on the silver. We've broken through this here, but then as we've seen in the past, there's always been resistance around 21. Okay, we had a spike up to 21.20, but and it's the rest is the trend line is there as well now. 21.20 is where it really plays ball or not for me. And I have a small observation to make into the midterms. Just a personal feeling is that if we get a split government, and if we get the Republicans going to block everything that Biden's going to try, despite what may happen to the dollar, it may be having a lower dollar effect, so silver and gold trying higher levels. But if they block everything that Biden tries to do to stimulate the economy, put his famous what is it, construction and infrastructure plans into place, and that got all shut down, I see little reason for this one to really take off a lot further. So I'm cautioning a little bit the moves that may come. I'm still longer term long. I did add on the 20 break the other day, but all my add-ons I've let them go right now, and I'm going to be very cautious into the midterms. And with that, Mr. Ryan, over to you.
Thank you very much, mate. Yeah, just on the COP stuff. I think any headlines we get that move energy markets are going to be short-lived. We're already hearing a lot of guff and strong rhetoric. Just as we're here on the Flow Show. UN General Secretary Guterres has said we're in the fight of our lives and we are losing. So I think at most what we might get is maybe some stronger comments, maybe bringing forward targets or working harder towards targets, reducing fossil fuel usage and everything. That might have a minor negative effect. But then what happens is everyone's going to leave the COP27, come back home, and they're in the middle of winter with Russian gas supply problems and trying to find fuel elsewhere and everything else. So it's all going to go back to going to get forgotten about 5 minutes after the event. So any short-term moves like that, I think you may want to be looking at for a potential fade. I won't go back over too much of what Kay said, but I did want to highlight a couple of things. The Aussie dollar still creeping up. Still needs to break this 60. Mine is a 65, 22, 39, if you want to be precise, zone there. I am watching this level to add to my longs. I'm long 64.74 down to 61.99. So I am looking for a break here to potentially add to the longs. This will be a potential range break if we move above that 65.40 zone, and that could kick us on. I'm completely in agreement with what Kay was saying about dollar CAD and the 35 zone. I don't know how much you heard from me before I cut out. I was trying longs off the level on Friday, got stopped out. Didn't look like it was breaking down though, so I didn't go with a reverse trade. I still feel it's a bit in the mix at the moment. It's not really ready to break lower, but if we get a sustained period of time holding this 35 handle, that might be the signal to potentially try shorts. Dollar yen, I'm still short a little bit, maybe being a bit too greedy, waiting for 149s to add to the position. I was a bit, I wouldn't say shaken last week after Powell turning hawkish, but I was a bit more cautious. In my dollar bearish view, I think the market partially is called in a bit of bluff on Powell and that hawkish slant, so I'm happy to stay short this one in particular for the longer term. If I'm not going to get anything up in the 149s, 150s, I'm maybe going to look more closely at if we get a break of this 145 area to add to my shorts and build up a bit more of a position there. And lastly, just to reflect, 1K was looking at gold, still long on this bounce off the 50 fib down here. Yeah, we're in the zone, 75, 85, 76, whatever you want to call it. People have different numbers for this one. Again, I might look to try a break attempt if we get through it. But it's a bit like dollar CAD. It's not looking like it wants to really push off. It's done a lot already, 50 odd, 55 bucks, 60 bucks since Friday, which is a big move in itself. And that the fact that we, found a bit of a top, then we can't quite hit that same top again, tends to show me that perhaps there's a bit of fatigue in here. Can it hold this level? If it holds this level, then we may well get a push outside, maybe up towards 1700s. But if we can't break this recent high pretty quickly from Friday, then maybe we're going to slip right back into the range again. So that's my thoughts on gold. I think we'll call it a day there today, unless any of you guys and girls got anything you want to add to that. Brand says, so if the gold breaks the trend, would that make USD go down? I think gold is more reflective of what the dollar's doing rather than the other way around at the moment. It has been ranging over the last few weeks. All the while we've come through central bank meetings, data, all that sort of thing. So it doesn't, the gold chart doesn't necessarily tell me that, you know, we're moving really based on the fundamentals. It's being pulled and pushed around by other forces. So until something changes there, and if China is going to head to COVID easing and the market's got that bone in its mouth, that is going to be a support for the metals, commodities, that sort of thing. That'll be another driver why we see gold higher. But if you had to ask me, I see more reasons for gold going up than going down right now. But unless we break out some of these ranges, you know, we're not doing anything. So that's what you need to look for. And on that note, we'll just say, yeah, go on, mate.
Yeah, I would like to put our audience to contribution tomorrow for the US midterms. We'd like to hear from you guys what you think about the outcome for one and what it means for markets on and more specifically, because we are all traders. So we are going to try to trade an outcome of the midterm. So tomorrow in our chat here, let us know what you guys are looking at, what your trading opportunities may look like over the midterms.
Yeah, and join us on the F.A.C.E show, because I'm going to bug Dale and Blake about it all, see what they have to say about it. I'm sure they're really looking forward to it. Okay, boys and girls, thank you very much for coming to the F.A.C.E show. Thanks, Kay, and we shall see you all bright and breezy tomorrow. Have a good one.